Okay, so welcome back to Coffee Cafe. So we are officially done with the entire month's worth of transactions. So now we are moving into starting to close the books and starting the closing process. Okay, sorry about that. So in this case, right, this is where we last left off yesterday, right? We finish all the way up to page 22 here. And we also finish up everything, right? We tallied up our total. So right now we are squared away. So now we need to go ahead and do our adjustments because we finished steps 1 through 5. We finished our adjusted trial balance and we came out even on both main accounts and sub accounts. So now let's go ahead and continue on with our accounting step, and we're going to complete our adjustment entries. So what are my adjustment entries? I've already talked about a few examples previously, but let's go ahead and go over them right now. So again, June 30th, it's Sunday, and we're going to finally begin to close out our account. So starting with the very first adjustment here, excuse me, we're going to need to adjust our ceramic coffee mugs. Yes, because it's our periodic inventory, right? This is where we go down to the physical basement, warehouse, or wherever you keep your inventory, and we take a physical count. And someone has told us that there is exactly 106 coffee cups available on hand. Okay, so that's my ending balance quantity. So, what do I need to do in order to figure out my cost, my periodic inventory? What do I need to do? How do I record my adjustment for inventory?
We need to convert, don't we?
Yes, we do. So inventory worksheet. Here we are. Coffee mugs. Right? This is the only one that's a periodic inventory. What do we need to do?
In short, we need to fill in the blank by for the net purchase
Mm-hmm.
part, and then we figured out how much it cost us total and how many we're able to sell it.
Okay.
Like how many pieces we got was saleable, I should say. Like after taking our return numbers and then
Okay.
broke pieces.
So first, let's go ahead and tally up our total so we can go ahead and solve for our net purchases. So, first things first, how many items did I purchase in grand total?
We bought 440 pieces.
Okay, 440 pieces at a grand total purchase price of
I think $1,092.20.
$1,092.20.
20.
Good. What's my
And
total freight? Go ahead.
we spent $500 in flight expense.
Okay. Oops.
So total cost for purchase was $1,592.20.
$1,592.20. Good.
Yes.
Okay.
And that goes to the purchase quantity and cost.
Yes. Before we get anywhere near that, let's go ahead and also solve for our return section here.
So the total is that we returned 9 pieces. and then we received a total $20.37 refunds and then discounts. Wait,
Say that again.
I had 2037, but maybe not.
In this case, I'm including the discount as well.
Oh, gotcha. Oh, I see why.
Wait. Okay, go ahead.
Yeah, it's 2411.
Okay. So, what was the total quantity that we purchased?
440.
440. What was the total cost of the 440 items?
$1,092.20.
How many items did we return?
9 pieces.
At a total of.
$24.11.
So again, purchase returns and allowances decreases our net purchases. So how many items do we actually have now total?
We had 431 to sell.
Okay, and then at 1068.09.
Yes.
Okay, freight adds 0 to quantity, but it adds to the cost, so we're going to add $500. Okay, so therefore, go ahead.
So we had 431 pieces for $1,568.09.
Good. Okay. So here, did we have any beginning inventory? No, because we just started our business as of June. So
Yes.
nothing there. So in this case, my net purchases becomes my goods available.
Yes.
Okay. Now in this case, right, before I move on, let's observe this. What is my costing method?
It's weighted average.
Weighted average. So in this case, do we care about keeping track of our inventory? Like
We
in the
don't
order
care
of
about
batches?
we don't care about which batches we sell first or anything. We just divide the total cost by the available pieces number to get cost of each mug cup.
Okay, so we'll do that in a bit. So in this
Yeah.
case, I have a total of 106 mugs as my ending balance, right? That's what my scenario told me, that I have 106 left. So my assumption is I must have sold a grand total of
271.
say that again, 271. We have a total of 431
Okay.
and we only have 106 left. So how many did I sell?
Oh, 106. 325.
Yes, there you go, 325. So then now let's go ahead and solve for, I need to solve for my cost of goods sold, ending balance, and I also need to solve for my average cost per item. So in this case, let me line up all three right here. So here we know that it's gonna cost it. There's a total of 431 units. We know that we have 106 left over, and we know that we sold 325. Now, what I know from here too is that I have a total of 1568.09 available. So in this case, I need to solve for my average cost per item in order to solve for how much it cost me to sell and also how much my ending inventory is. So in this case, how do I solve for my average cost per item?
1,568.19 divided by 431.
Okay, what do you get?
I got 3.638260.
Okay, so then that is going to be my average cost here, and that's also going to be my average cost here. So in this case, how do I solve for my cost of goods sold? How much is it going to cost me if they're each at 3 63826.
So ending the balance, I got 385.66. And cost of goods total is $1,182.43.
Good. So those are my numbers. So now I need to journalize everything. Okay, starting with what? How do I journalize my conversion entry?
It goes from purchase expense and a flight expense to
Sorry.
ceramic mug.
Ceramic coffee mug. So let's check it out. That's an inventory item. So let's see. Inventory for the ceramic coffee mugs is account number 1250. So that's my inventory.
Yes.
Okay. 12050. Okay. What else do I need to recognize?
We need to do purchase expense.
Okay.
Let me go over the note.
Purchase expense.
Yeah.
I'll go one more.
And then flight expense for sure.
I think this was 61,000 for purchase expense.
And
Purchase expense 61,000. Freight expense is 6,300.
and then I got it. So the top one is the leftover, and then the next one is cost of goods sold.
Okay, so let's go take a look at my chart of accounts. Do I have a cost of goods sold for the mugs?
Not directly, probably. We have, yes, 50150.
Good. So I do have a cost of goods sold for the ceramic coffee mugs. So COGS, ceramic coffee mugs. 50150. Okay.
And
We can plug our numbers in first and then we can figure out what we're missing.
okay.
Okay, so let's see. What was my ending balance in my inventory?
Is $385.66.
Okay. What was my total cost of goods sold?
$1,182.43.
Okay. What was my total net purchases? I'm sorry. What was my total purchases price?
Inventory.
My original.
Before the discount or anything,
Yes.
is $1,092.20.
And the freight?
Was 500.
Okay. So in this case, if I go ahead and do my equal sum here,
Yes. Oh, so we need to list the return allowance and discount.
yes. So I got 1,568.09 and I got 1,592.20. So what am I missing? And you said the purchase returns and allowances.
And then purchase discount.
Yes. Purchase returns and allowances. And I have also a purchase discount. Okay. Let's see what those accounts are. They are returns is 61,500 and the discounts is 65,550. Okay. How much was my discount for?
Oops. The discount was $1.87.
$1.87. And then I got $22.24 for my returns and allowances. Okay.
Yes.
Okay, so there you go. Now that I add those numbers in there, do I match my debits and credits at 1592.20 on the left and 1592.20 on the right?
I'm working on it. It's 22. Yes, they match.
Yes, they do match indeed. Okay. So last but not least, what should my description say?
Conversion.
Okay. Conversion entry.
Yes, conversion entry. And I think we note how many pieces we have sold.
Okay, sure. So conversion entry for periodic inventory.
Yeah, in practice, I believe we noted how many pieces we sold and how many we have in hand.
Okay, so ending balance, I have 106 mugs. Okay, I sold 325 mugs and returned 9 mugs. And then you can even include received 1% discount. Okay. There you go. So what do I do next?
We need to update the general ledgers for each account.
Okay, starting with your ceramic coffee mugs. Ceramic coffee mugs is an inventory item. So here's all. Oh. So here's all of my coffees. So here's my ceramic coffee mugs. Today is the 30th. And what are you going to say?
Let me find that account first.
Okay.
So it's 6:30, and then could we say just ending balance 106 month?
Yeah, sure.
That way we know how much we have for how.
I'm gonna go ahead and throw in adjustment here,
Okay.
and we have ending balance of 106 units. And you can even add in the cost per item if you really wanted to, but in this case, we are also able to just enter it in here, right? Post
Yes.
reference.
And then page 23 now.
Yes, 23.
And it's debit of $385.66.
Okay, so 38566.
Yes.
Okay.
And then we go to the cost of goods sold tab. And then can we just copy the same entry adjustment with balance? I mean the sold 325.
Mhm.
Okay. So it's 6:30 and adjustment of 325. Sold on page 23 for debit 1182.43, and then that's equal to the total balance right now. And then we go to the purchase return the allowance expense operating. Wait, yes. But also we do have to.
Mhm.
Oh, so now we total it and then enter as a debit. I see. So 6:30 for adjustment. Can we just say adjustment? That's it.
Mhm.
Okay, and then debit would be total of 2224.
So this is what it means to converting, right? You're
Okay.
zeroing out these accounts because you're literally taking them out from these accounts
Mm-hmm.
and putting them into inventory and cost of goods sold. Now in this
Okay.
case, I'm also taking out from my refunds. So in this case, they should give you an account balance of
0.
0. Okay.
Okay.
Same thing. You got to do the same thing to your discount.
Okay. So it's $1.87. And then balance is now 0.
Mhm.
And then we go to the purchase expense. And then we do the same with adjustment entry. And we said 23. And total is now 1,000 $92.20 and give us a balance of 0 on the debit. And then we do the same entry for flight expense, crediting $500. So 500 credit and then making the balance 0. And I believe that's the end of the entry.
No need for subsidiary ledger because this isn't dealing with anybody.
Oh, we do? Okay.
No, this doesn't no, I said no. We don't need to go to a subsidiary because
Sorry?
it doesn't
Okay.
involve anybody.
Anybody, so it's internal.
It's an internal transaction, right? We completed the journal. We completed the ledger because always, if you touch the journal, you have to post it to your ledger. Okay? And therefore, we already did our inventory worksheet.
Okay.
So that means your inventory worksheet is completely done. You will not need it for the rest of the entire closing process. So you can save your worksheet and be done with it and close it out. You do not need your inventory worksheet any longer. Okay? All right, so that eliminates one worksheet. So let's see what the next worksheet is. Okay. So now that we finished that first one, now let's take a look at what we have here where we need to figure out the cost of materials. So in this case, right, here for the medium coffee cups, the large coffee cups, sugar and creamer, this is the amount that we used. So this is 5,297 cups used, 4,331 large cups used, 120 pounds of sugar has been used, and 22 cases of creamer has been used. Now these are the cost per item, okay? All right, this one I did the math. I did the calculate the cost per item. I did calculated that for you. Now it's your job to determine how much is the total of each cost. So in this case, right, what account would I use to represent that I'm calculating the cost of what it cost me to sell my coffee cups and the materials that I used to create my product? Well, what account am I going to be using?
Would you say that question again?
Which account would I be using to represent what it cost me to when I sold my product, which is my coffee cups, right? How much it cost me to use the materials to produce the product? Okay, the hint is on your work is on the scenario. So if I were to sell one cup of coffee, right? One medium sized cup of coffee. So far, I've been counting how much the liquid cost. How do I account for the cost for the cup and the sugar and the creamer that I used to produce that cup?
Don't we just divide the number of cups sold?
Well, what account am I going to associate that with?
Cost of material?
Cost of materials, because I need to calculate how much it costs me to sell one cup or to use one cup, for instance, okay?
Okay.
So in this case, yes, I already divided that for you. I already figured out what the math was behind it by taking the total amount of cups that we purchased at what the unit price was, which is in this case it was like 5 cents, right, per cup. And because there was sales tax included, I divided the sales tax amongst the total amount of cups that we purchased. So you get 0.542 cents per cup for medium cups, and then for the large cups it's 0.812 cents per cup. And of course the sugar, since there's no tax, it's 0.36, and then the creamer is 16.33 per case. So that one, because there's no tax. So in this case, how do I solve? If I know that I sold a total of 5,297 cups, right? How do I know how much my total cost of materials are? Now, first off, where did I get this 5,297? Well, what have we been doing in our ledger?
We've been adding, noting how many cups per day we are selling.
Exactly. So you're able to figure that out as well. So that's why for this, this is what I recommended you guys to do, is that instead of putting like letters and words in there, it won't calculate for you. But you have a total down here in the gray, and you could go ahead and do a rough, equal sum to figure out how many coffee cups you actually sold. So in this case, I can go ahead and highlight all of these numbers here to get me my grand total of ceramic coffee mugs. Okay, I hit the wrong one. So that's for instance, right? I don't know why there's a date there. I think it's formatted differently. Let me do this one over here. Okay, so let's take a look at my not ceramic coffee, but my medium coffee cups here. Now this is for my medium regular cups. Okay, so I get 2,624. You take that one, that's only half the sales that you made, right? Because you have medium supreme cups. Calculate that one, and you should get your answer to be 5,297. Okay, so that's where I got my numbers. Okay? Again, this was pre-calculated ahead of time. So if I sold a grand total of 5,297 medium cups, and I sold a total of 4,331 large cups, how much is it going to cost me to calculate the cost of material when I sold all of my coffee cups?
The unit number sold times cost of per item.
So in this case right here, I got cost of material for medium, cost of material for large, cost of material for sugar, cost of material for creamer. So I'm going to go ahead and identify all four of them at the same time. So it just makes it much more easier instead of doing one at a time. Okay? So yes, you can do that. So cost of material for the medium cups. Then I got cost of materials for the large cups. I got cost of materials for sugar. And I have cost of materials for creamer. Right? I forgot what numbers those are. 5,1,200, 5,1,250, 5,1,300. Okay, so now that I figured that much out, right? I can go ahead and start calculating what those numbers are. Okay, so I'm going to use equal round, of course, to solve for every single one. So equal round. Okay, if I sold 5,297 cups at 0.0542, so that's how much each cup will cost me. What is my grand total cost for the sales of using the medium coffee cups?
I got $287.10.
Good. Let's do the same thing for my large cups. If I sold 4,331 cups, and it cost 0.071 812. How much is my total cost of materials here?
$351.68.
Good. What about sugar? If it's going to cost me 0.36 per pound and I use 120 pounds, how much is my total cost of my sugar?
$43.20.
Okay, and then let's do the same thing for my coffee creamer. If it's $16.33 per case and I used 22 cases of creamer, 22 cases of creamer, what's my total amount here?
$359.26.
Okay, good. Now that those numbers are solved for, now I need to figure out where am I going to take these cost of materials out from?
Don't we need to take it from inventory?
Why from inventory? Do we actually have a section in our inventory?
Did we put in the cost of goods operating?
Wasn't it business supplies or something like that?
We take it directly out from where we purchase our business supplies from, right? So that means I'm taking the cost of material directly out from my respective items. So in this case, medium coffee cups, it's going to be taken out from medium coffee cups. Large coffee cups, it's going to be taken out from that account. Sugar and creamer respectively. So that means I'm taking them out directly out from my medium coffee cups account, my large coffee cups account, my sugar account, and then my creamer account. Okay, which all starts with 11,760, 11,765, 11,770, 11,775. Okay, and you're going to take that exact amount from each account respectively. So that means I'm going to take 43.20 out of my sugar because that's how many I used. Okay, so I'm going to go ahead and write here to say to adjust the business supplies. Okay. Do you need to identify how much items you sold? That can be left in the ledger. Okay. So now that I have my adjustment entry done, let's go ahead and pop them into our ledger. Okay. Starting with cost of materials. So again, that's a cost of goods sold. Here's cost of materials. So how much did it cost me for my medium coffee cups that I used? So this is where I can identify that this is an adjustment entry, of course. How many cups did you sell for the medium cups? Well, in this case, I sold 5,297. Yes. Okay. And how much did it cost me to sell all 5,297 cups?
$287.10.
$287.10. Right? Because right now I have to adjust my inventory because right now when I go into my, or not, sorry, not my inventory, my business supplies. If I go into my business supplies right now, if I go into my assets, it says that I still have 7,000 coffee cups. Is that true when I've been selling all these coffee cups along the way?
No.
No. So this is exactly why we need to adjust it because right now I used those coffee cups. So again, that's another way we can express expenses, right? We're getting rid of the product. We're using the product, right? And in this case, we're adjusting our supplies, right? These things are business supplies for us to help create the product that we're selling, which is the coffee, right? So in this case, these are additional things that are going to be considered additional cost to the product. Okay. So in this case, there's my medium coffee cups, right? What about my large coffee cups? I sold 4,331 cups. So how much did that cost me?
$351.68.
Awesome. Good. Okay. Next one is to adjust my sugar. How many pounds did I use? 120 pounds. How much did that cost me?
$43.20.
$43.20. Okay. Last but not least, my creamer. Okay. I used 22 cases, right? Each one is a 12 pack. And how much did that cost me?
$359.26.
Okay. So then now let's go ahead and adjust my supplies accordingly because right now, like I've mentioned, right? If I go ahead and take a look at them now, right? So my first one I have here under my business supplies is my medium coffee cups. It says that I purchased 1,000 here, I purchased 2,000 here, then 2,000 here, and 2,000 here. So right now, my book says I have a total of 7,000 cups available. And is that true when I've been selling all my coffee? No. So that's why we may have to make an adjustment because we need to make our books reflect the actual number that we actually have available left on hand. Hence why it's an adjustment because we're doing it at the end of the day. So again, not only are you taking a physical count of inventory, you're also taking a physical count of supplies. Because again, if you're in a business, you need to have your supplies in order to create your product. If you run out of cups, what happens? You can't sell your product. So therefore, you got to go run out and buy the supplies that you need so you can sell your product. So it's also crucial by the end of each accounting period to know exactly how many cups you have available so you can predict whether you need to go run it out and buy more or not before you start your next accounting cycle. Okay? So in this case, right, this is where I'm going to go ahead and put in my adjustment entry. So adjustment. Okay. Now, if I sold 5,297 cups, right, how much should I have remaining if I started out with 7,000? Right? Because I got 1,000 plus 2,000 plus 2,000 plus 2,000. That's 7,000 cups I started out with. And I sold 5,297. So how many cups should I have left available?
1703.
1703. Okay? Remaining 1,703 cups. Okay? General Journal, page 23. So therefore, it's a credit for 287.10, right? And if you adjust your inventory, you should reflect that you should have a remainder of $91.70 worth of medium coffee cups left. Okay? So you're going to do the same thing to the large cups here. So in this case, I am making an adjustment. I sold 4,331 cups, okay? And therefore, I should have a remaining. How many cups should I have remaining when I purchase 1,000, 2,000, 2,000, 2,000? So I have a total of 7,000 cups to begin with. So how many do I have left available?
2669.
2,669. Okay. And then we used 53168. Okay. And that should give you my grand total left remaining to be 216 and 65 cents worth of cups. Okay, now I gotta update my sugar. Today is the 30th, right? We got an adjustment, right? And here we used 120 pounds of sugar. So we should have a remaining of how many sugar? If I bought
60.
60 plus 60 plus 60, right, gives you 180 minus 120 should give you 60 pounds remaining. And then you're going to subtract $43.20. So that should give you $21.60 left, right? Because you have 60 pounds of sugar left. So the one that you purchased on the 27th, we still have that batch intact, if you think of it that way. Okay. So, last but not least, my creamer, right? We used 22 cases. Okay? You should have a remaining of how many cases? Let's see. We bought 3 from the very beginning, then we bought 15, then we bought another 15. So we have a total of 33 cases of creamer. So how many cases do you have left?
11.
You have 11 cases remaining. Again, you're going to subtract out $359.26. So how much should you have left remaining? You should have $179.63. So for 35926, 35926. Okay, there you go. So you have a remaining balance of 17963. Okay. So that will conclude that section there. Okay. That one doesn't require you to go to any inventory, doesn't require you to go to the subsidiary ledger because it's an internal transaction. Okay, we just adjusted our business supplies accordingly. Okay, so let's see what happened next. Next we have here is going to be that you printed out your credit card statement for June, okay, from National Bank website. So, right, the beauty of technology, you're able to print out your statement right then and there, okay? So it's National Bank Visa Gold credit card, right, bank statement. Right? Or it should be credit card statement, but anyways. So here it is, right? You got the 6/30 statement date. You got the billing number. You have the statement balance of $2,156.96. You got charged interest for $32.35. And let's see what else. So your total credit balance is now $2,189.31. And here what you have the due date to be due on the 10th of July. Okay. And of course, you have a minimum payment of $35. So a lot of things here. Now, there are a couple ways that you can record this transaction. All right. All right. So can we kind of guess which ones would be it? Would you choose to record this as a bill? Yes or no?
We don't need to because we have account for the Visa payable.
Okay. What do you mean by that? Did we not receive a bill?
Yes.
So are we going to record it? Now, you're not wrong. Your answer is correct. That's one of the options. You don't have to record it, but why? Why don't you have to record it?
Because we are keeping the receipt. We recorded the receipt that we use credit card to pay for, I should say.
But we got charged interest.
Oh, gotcha.
Okay, but wait, that wasn't the answer. Okay. Now, if I'm recording a bill, do I know how much I'm going to pay my credit card off? Do you know how much I'm going to pay my credit card?
Not until we decide how much we pay.
Not until we decide to pay. So in this case, that is one of the reasons why you do not need to record this transaction because you don't know how much you're going to pay. That's a huge thing when you record bills, right? You have to know what you're going to pay so you pay it, right? Now in this case, yes, you are correct. We have our own separate account for the Visa credit card. We don't need to put it into our accounts payable. That's true. But that option too is yes, we can. If you know that you're going to pay or you know how much you're going to pay, let's go ahead and take a look here, right? It says right here that you're going to record this bill, okay? Because you're going to assume that you are going to pay off the entire balance at the end of the due date. Okay, so use interest payable to record the interest accrued for this transaction. So in this case, I want you to record this bill. Okay, why is it necessary to record this bill? Well, I'm going to tell you this. Oftentimes, if you don't record your bill, you'll forget about it. And that's the whole purpose of why when you receive a bill, you should put it into your books regardless of whether you pay it or not. Okay? So in this case, this is option number 2 where yes, I will need to record this bill. And because I said to keep really good credits lines and scores, right? You're going to pay off the entire balance. Right? And you're going to pay it off by the due date. Okay? So that means by July 10, we will pay off this entire credit card amount. So in this case, I have what I owe, I have what I got charged, and so on and so forth. So in this case, how am I going to record this transaction? If I choose to pay it all off, but not right now, I'm going to choose to pay it off by July 10. How do I record this bill?
Can we put it in account payable?
Yes, you are going to put in an accounts payable.
And you'll use, for your debit, you've got Visa payable and you've got, the interest payable.
I'm sorry. Yeah. Sorry. I put accounts payable first. Yes. Accounts payable's got to be down here. Yes. What did you say? What was the first one? So Visa payable goes first.
Payable and then interest payable.
Interest payable.
And then you put,
Accounts payable.
the accounts payable for the credit.
Okay. For the full amount, you said?
Yeah, the accounts payable will have the current balance. Because the Visa payable is how much you charge, and then we've got $32 in interest. That has to be debited as well.
Okay. So now in this case, if I'm making a payment and I'm doing my accounts payable, my bill is going to reflect that I have what I charged and what I was charged interest for, right?
Right.
Now, here's the idea. Does my bill, when I pay off my credit card, am I paying just for the credit card amount?
No.
So
that's why I said put the balance one of $21.56.96
okay,
in the Visa payable.
now my question
And then
is,
the interest payable.
now where did
But
this
what
interest
interest
derive from?
payable is the whole thing.
Okay, where did this interest derive from?
It's the 18% divided over the 12 months of the $21.56.96.
Now, question to you, is this a charge that you have to pay separately? Or
No.
is this, why is it not separate?
Well, you put it in your books separately because there are tax things that have to do with interest,
Okay.
but you pay it with one check for the total amount if you're going to pay the whole thing on the due date.
Oh, that's correct. That is correct. That is very correct. You are going to write a whole check for the entire amount. But in this case, is this interest, I'm sorry, let me try to figure out how I'm trying to say. Is this interest something that you are having to pay for as part of the operations of owning a credit card?
Yes.
So are you paying it together or are you paying it separate? You want to pay it together. Can I record it as I'm paying it together? So for this example, right, you said you're going to shove everything into accounts payable, right?
Right. Because that's the bill.
That's the bill. But does your Visa payable reflect this entire amount? Did you include the
No.
okay.
That's why we have two accounts for a debit.
Okay. All right. Yes, I understand that.
So I'm not sure I'm hearing what you're asking.
Now in this case, right? Let's take what May said. We're going to be transferring the entire amount of my credit card balance over into my accounts payable. Yes or no?
Yes, we are transferring
Yes,
the balance of the
all
Visa.
of the Visa.
Yes. Now my Visa only holds $2,156.96. Now in this case, yes, we identify that I owe for the interest payable. Now, can I shove my interest payable into my accounts payable? That is what I'm asking you. Can I put a liability in a liability and in a liability within each other when this interest payable derives from nowhere?
Oh, I see what you're saying.
Yes, that's why I keep asking the question, but I see where I'm coming from and where you're coming from because the way I'm saying it is basically you're telling me this exact answer. I see exactly what you mean. But in this case, right, I'm creating a liability, but in this case, I'm debiting a liability. How is that possible when I don't even have a liability to begin with? I can't be debiting a liability if it ceased to exist.
Right.
So therefore, I'm missing one more account.
Yeah. So
Yeah, so in this case, right? Yes, I can transfer my Visa payable into my accounts payable because yes, I'm just moving from one account to another. But in this case, I can't create an interest payable if I don't have the interest payable derived from somewhere. Right? It doesn't come from thin air. You can't just create interest payable from thin air. So where would my other account be existing?
So we just
interest
consider
expense.
it
It would
as
be, go ahead, May.
expense.
It is an interest expense, correct? Because in this case, your agreement was you were going to pay this company all this interest on top of what you already owe them. So that is a separate expense for you claiming that because you borrowed their credit card, you're borrowing their money, you understood what the agreement terms is, and that now you need to pay for the interest. Now, like I've mentioned, you can't create a liability without having a liability because how do you debit a liability if you don't have a liability to begin with? So that's exactly why you need to have an equal and opposite reaction, right? So your equal and opposite reaction would be having a interest expense here to begin with. So that's why it didn't make any sense in the journal terminology too. How can you debit a payable account if you don't have anything? So that's why you're gonna you're gonna have an interest expense, and then now when you actually pay for it, you're gonna pay for the entire amount, including the interest payable. So again, when you pay off this credit card, so I'll just give you an example here. What's gonna happen is when you pay off that credit card, you're gonna pay off the accounts payable and the interest payable. Okay?
Yep.
And then you do the check all in one.
Okay.
Okay, there you go. Awesome. So yes, this was a tricky one, a confusing one, right? We all say, oh, wow, well, you can dump it all into accounts payable, but how is that true? How did you derive this interest to begin with? And how are you debiting this account when you never recorded it in the first place? So again, you could have done this too. You could have recorded the interest completely separate and then go ahead and then plug it into your liability. Yes, you can do that too, but that's two extra steps that you have to do. So technically, yes, you could have done interest expense and interest payable, and then interest payable, Visa payable, and then accounts payable. Yes, that would work, but you need to have that initial entry for the interest expense to begin with first, to recognize that you charge an additional amount for the interest to begin with.
So by doing this,
Mm-hmm.
then we also have a conversion to transfer the interest expense over back over to interest payable at the end of whenever we pay it in
Correct.
July.
Correct. So in this case, yes. But either way, this would be the
Yeah.
most easy, concise one because, again, you eliminate having to create too many journals for no reason,
Right.
right? Why are you transferring from one account to another account to another account to another account, right? You could save much more time and space by just recognizing it all in one and just doing it as you go. And then when you pay, right, then you pay both accounts payable and interest payable. But if you choose to do the other route, yes, I see how you're coming from, and that would technically be correct. But that's if you had that initial journal entry. So yes, you can be transferring from one account to another to another to another. But again, why do that? That's so complicated.
Right.
All right.
So the conversion will happen next accounting period.
Correct.
Okay.
Correct.
Got it.
And then at the end of the
Okay.
day, you just pay National Bank for one check because you're paying them because they you owe them money, but not only that, you also owe them interest on top of that. So at the end of the day, those two accounts will end up being zeroed out either way because of when you make your payment.
Gotcha.
Mm-hmm.
Okay. Thanks.
Yeah, so there you go. All right, so there you go. Interest expense must come first and then interest payable. So then now you create the liability. Okay, so there you go. Now we can fill in all of the rest of our accounts numbers here. So let's start with interest expense, which is $64.50. Okay. Next is accounts payable, which is $20,000, and then we have interest payable, which is going to be account number 27500. Okay. So there you go. And then now you can go ahead and say this was Main Bank of Nevada, bill number, due date, whatever you want to put in here. So, okay. So again, this is National, not Main Bank, sorry. National Bank Visa credit card, okay? Billing number. Eight seven nine four five three two one. Okay. Due date. Well, in this case, it's gonna be due in 10 days. So you could put net 10 if you want to. Okay. All right. You can also put your interest expense percentage, whatever it is, but you could save that for your ledger. Okay. So now, okay, so we have 2,156.96 for my total amount of my Visa. I have $32.35 for my interest, and I'm gonna copy these as well. Okay. Awesome. All right.
Okay.
So now we could go ahead and plug our numbers into our
The ledger.
yeah, the ledger. Okay. So let's see. Starting with Visa payable here. Okay. So I'm going to be transferring this entire amount because I am subject to pay my credit card off at the current balance as it is right now, which is $2,156.96. So here it's 30, and I'm going to go ahead and put
I put the bill number,
okay, bill number, good. Bill number
879-45321.
I think I missed an okay, 45321. There you go. And I'm gonna debit my balance for that 2,156.96. Okay.
And that should give you a zero balance then in that account.
Yes. So that doesn't mean you can't stop using your credit card, right? That means when you pay off your credit card as of July 10, right? That doesn't mean you can't stop using your credit card. What happens is you just make this payment because that's your bill due date, right? That's what your statement says that you currently owe right now. Now, if you are currently continually charging and charging and charging, then that's just going to rack up for the next billing cycle. Okay, so that's how credit cards work, is that now that they billed you for this amount, if you continue to keep adding and not paying, then the interest will accrue. But if you end up making a payment, then it will reduce that amount on the credit card, but the current balance of you currently charging it is still going to be there. Okay? You're not going to pay for what you just charged, right? The billing cycle is already over. All right, so in this case, right now you're at zero, but that doesn't mean you can't stop using your credit card. You can still continue to use your credit card. Okay. Then I got an interest expense account. Okay. Interest expense. So again, you could do National Bank Visa or the bill number even. Visa credit card. What was the percentage on that? 18% interest. Okay. And then I'm going to put the bill number on there, so then you know what it's referring to. Ooh, excuse me. All right. And we debited the interest by $32.35. Okay.
And then we go back to liabilities, to accounts payable. And I just put the bill number in there like we do the invoice number. On page 23, and we would credit 2156.96.
Okay. So
And
yeah,
then we
888805. Sorry, go ahead. And then last
and
but
then
not
for
least.
interest payable,
Mm-hmm.
it's down the ways.
Okay, so here you go. Interest payable. Here it is.
And this one I put again Visa credit card with the bill number. credited 32.35.
Good.
And then we go to the subsidiary one because we do have something for National Bank.
Yes, we do. We actually have a bill this time. So let's see. Let's go find National Bank. NV Utilities, National Bank Visa credit card right here. So it's up to you. You could choose to overwrite this one, or you could just go ahead and create a new one because in this case, there's no account balance on there. So I'm just going to go ahead and create a new one just so then I don't overlap anything. Because in this case, the first line tells me what my agreement terms are, what my account balance is, or what my credit limit is, and so on and so forth. And in this case, since I already know all this information, I'm going to go ahead and put in that we got 18% interest of
32.35.
$32.35. Okay. Bill number 8794531. Post reference 23. So then now it's due on the 10th. So this is date driven. So again, you could put the same thing here, but this time you actually know what the due date is. It's July 10. All right. And of course, the invoice amount is going to be for the full amount, including the things, because it's the entire bill, right? So you're going to owe $2,190. I forgot the number already. $89.31.
And then we do our fancy little formula, take the invoice amount and subtract everything out, and there you go.
Awesome. There you go. So now you owe National Bank Visa credit card $2,189.31. Okay? And it's due on the 10th. There you go. You need to record the bill at least in one of the areas. So again, if you choose to, because again, you have two options, right? If you're going to record the bill, but know how much you're going to pay. If you don't know what you're going to if you don't know what you're going to pay, wait till you do pay. Okay? Now, let's go take a little quick detour real quick. Now, what if I did choose to pay my credit card? Okay? If I chose to pay today, how would I record my amount differently? Well, how would I?
You'd put checking in the instead of accounts payable.
Well, in this case, if I didn't record the bill and I chose option number 1, right, that I wait till I pay my credit card and then I record it.
Well, boy, would you separate the interest out though?
Well, in this case, does my Visa payable include my interest?
No.
No, it doesn't. So you're going to end up having to record.
Yeah, you've still got to have the same things except for instead of accounts. Well, the checking would cover.
The checking would cover all of it. That's correct.
Right.
So in this case, this is an exception where, yes, because I'm creating an interest expense, right, and I'm paying for it, as well as I'm paying off what I owe on the credit card.
Right.
So yes, so this was something that I taught you in chapter 10. That when we have to deal with interest, it's going to be a separate expense because it isn't what you didn't charge yourself the interest expense. They charged you and they billed you for it as a separate charge because that's what you agreed to, right? So in this case, that's not what you borrowed. You borrowed that on top of what they charged you. So it's a separate expense or a separate cost for owning a credit card, right? So That's the difference there. It's going to be Visa payable, right? Because you're paying the credit card off, but you still have to recognize the separate interest expense because you didn't attach the interest expense to the credit card. That
Right.
they even tell you that too on the bill too. They only added it in there after you haven't paid it. So that's something you also need to make a note as well. And you always want to keep track of your interest as well so you know how much money you're actually paying into interest. It's very painful to know how much, people pay into interest for owning a simple credit card. Okay. All right. Yes.
So I got lost in the middle of that conversation. So we still recognize the balance in the Visa payable, and then we also create the interest expense because it's the expense it occurred, and then we pay off. We're using a checking, but how do we is that interest expense still has a balance? So that's okay.
Well,
We just
remember, we write expenses off at the end of the year. At the end of the accounting
okay.
period. So it doesn't matter whether we have a balance there or not. It's going to end up being zero.
Also, we're just gonna have a Visa payable and the interest expense for the debit and the checking for the credit
Correct.
to pay the bill. Okay.
Yeah, just to pay the bill. If you choose not to record the bill and you decided to take
Okay.
option one, wait till you paid the bill and then recognize the bill, then go
Yeah.
ahead and do that. Remember, that's the difference between cash versus accrual, right?
Yeah.
You only pay the bill when you are ready to pay the bill. Where
Yeah.
this one, we're taking an accrual approach where we're going to record the bill because we need to know that we owe money.
Okay.
Even though we already know we owe money,
Okay.
right? So that's the idea here.
Okay.
Mm-hmm. Okay. All right. Okay, and of course, when you do end up paying this bill, since I recorded it, I already mentioned it earlier, you're just going to have an accounts payable, interest payable, and then the checking, right? Because you already recorded the bill that you owe the money for the credit card, but you also owe money to interest, right? And you're paying them off. So that is what happens afterwards. So now that we recorded the bill into our subsidiary ledger, we are actually completely done with this transaction. Okay. All right, it's about 2:55. So what I'm gonna do is I'm gonna stop here, real quick. Not real quick, but we'll go ahead and take our 20-minute break. So right now it is exactly 2:56. I'm just gonna go call break now. So please be back no later than 3:15, and we'll go ahead and finish as much as we can for the adjustment.